Markets in Focus is a great way to keep on top of FX analyst currency projections for some of the most traded currency pairs. Market Analyst Brenda Kelly at CMC Markets in London joins me now on DukascopyTV. Hi Brenda, so we're going to start with the Australian dollar today. At CMC Markets, what are your forecasts for the Aussie dollar, US dollar in the short, mid and long term?
Well, the Aussie dollar has had quite a strong week, a lot of risk on in the markets, and that has fed nicely into the commodities. So at the moment, I would say, given the fact that there's a possible expectation of a boost of liquidity by the Chinese economy, that could also help the Aussie dollar. So I think in the 1 month we'll be looking at 1.4 acting as support, and maybe moving in a consolidation level between now and the 3 month level around 104.50, and then maybe breaking out towards the end of the year towards the 1.06. Now, this could all effectively be tempered in some ways by the fact that if any quantitative easing in the US becomes on the table at the moment, then you could ultimately see a little bit more of a push and strengthening in the Aussie dollar.
What about the Swiss franc? The Swiss National Bank has said numerous times they will defend the 120 Swiss francs per euro floor for as long as it's deemed necessary. So as a result of this, what are your expectations for the dollar Swiss franc during the year?
Well, absolutely. The idea that the Swiss National Bank could intervene around that floor, around 120, could ultimately have an effect on that other pair, the US dollar Swiss. So with that in mind, and given the fact that we're seeing the euro Swiss around the 120, just above it at the moment, if it does fall below it, then the likelihood is there. And given the expectations or the lack thereof coming out of Greece and the PSI that's going on there, then that could very well happen. As a result of that, I could see the 1 month heading towards the 95.50, with the 93 level at the moment acting as a very, very inclusive support. Then in 3 months it would more than likely rise up towards 98.40, ending at the year around the 1.04. So again, you do also have the issues with regards to the central bank intervention in the US, which could obviously weaken the dollar to a certain degree. But given that last year it did act as a safe haven currency, despite its downgrades and despite the debt ceiling issues, we could probably see more of the same this year.
To end then, Brenda, at CMC Markets, what is your stance on the euro dollar and how do you see it performing going forward?
Euro dollar. Now that's obviously another interesting one. We have seen it head towards the 130, 130.50 just this week gone by, but that has fallen back somewhat below the 130 level, which now could effectively act as resistance in the near term. While below that particular level, and while the uncertainty remains and any sort of indication is that there will be an absolute default on the Greek bonds, maybe towards the end of March, then you could very well see the euro dollar head down towards the 126, which is pretty much the lows of last year and early January. Any fall below that, again, I think you could see support around the 122, if not even further below. Again, the euro dollar is one of those currencies that has been sort of acting as a risky currency. So any sort of surge in the equity markets needs to be matched with the euros. So there is a possibility of a retracement in the next month or so, up around the 131.50 level. But for the most part, we will be quite bearish in terms of where the trend is for the euro.
Thank you very much for that, Brenda. There'll be more editions of Targets in Focus later on in the week with FX analysts from both SCB and Nordea. So make sure you tune back in for that. Goodbye for now.